Cool. Thank you, Tracy, for joining. I appreciate it. Okay. So. Yeah, it's just two.
It is.
But let me get intimate. Okay. Commission check defense, buddy.
Yeah.
That's what this says. Avoiding gift fund pitfalls. Whoa. So. Show you here.
I really like this letter.
Yeah. So gifts, right? So you're getting gifts on a loan, right? But people can do that, right? So you can get gifts from family members and everything. You get gifts to help the down payment, closing costs and everything else. The thing is that gifts can't, and so closing costs, down payment, whatever you want. So it can be for anything. But the thing is with a gift, it has to be a related person to any one of the following. So you gotta be the borrower's spouse, it's just basically anybody. So it's the borrower's spouse, child, dependent. Are you gonna check it out? Oh, thank you for showing up. It's great. That's,
I can't read.
well, I'm not really supposed to.
Oh, okay.
I will kind of go over it. It'll be on the screen too. All right.
Like, I can't, this is so small.
So anyhow, so we were just talking about gifts, right? So the whole idea is that gift funds on a loan, on a transaction or purchase, even a refinance, you can use gift funds, okay? You can use for the down payment, closing costs, the whole thing, right? So, but who can gift the funds, right? So you can gift funds from, borrower's spouse, child, dependents, an individual related to the borrower by blood, marriage. What's the other part? Blood, marriage, what? And options, you know, too. And then, the guardian of the borrower, a person whom the borrower is a guardian, the borrower's fiance, borrower's domestic partner. So basically just anybody that's family, okay? And so are we gonna go around and do blood tests for everybody?
Yeah.
Yeah, exactly. We got the gift police out there looking at it. So, yeah, so it's basically, it could be extended family, it could be any family. It's my aunt, uncle, whatever it is. They can gift money to it. Also your fiance or domestic partner, which are the two big ones too. So you have two people buying, one person's on the loan, the other one's not. That kind of thing. So. And then documenting the gift. So once the gift comes in, you know, we have to document how you get it. And so, the gift letter, the gift must be evidenced by a letter signed by the donor. And that's what I have right there. I got a copy of what a gift letter looks like.
Oh, this is the gift letter?
And so I have an FHA one and a conventional one, so on the backside. So you have to specify the dollar amount of the gift, right? So on the letter, it'll tell you, on the conventional one, it'll just say, hey, here's a person's name. How much you need to, here's the address, donor name, donor address. All you have to give the information to the donor. Then you have to say how much you're gonna gift. And then when you're gonna transfer it and that kind of thing. But the big thing on that is the fact that it doesn't show, or it's on there, it says it can't be repaid, okay? For the purposes of this transaction, it can't be repaid, right? So, but after the transaction, who knows what happens, right? So just the person who's donating or gifting the money has to sign the letter, right? And so on there, it says, hey, look, as a donor, I certify repayment is not expected or implied on this gift, either in the form of cash or future services. I further certify that the funds given to the homebuyer are not made available to myself, the donor, from any person or entity with an interest in the sale of the property. It's gotta be arm's length, right? Real estate agent, broker, builder, whatever. So I certified that these funds are not provided by a business account, excluding VA financing. So if it's coming from a business account, sometimes we can't use that. You know, if it's coming from my construction account that I have as a business, I can't do that. Okay?
Do you guys verify, like, how long the person has had the funds for and like where they're coming from exactly?
Yeah, I'll get to that. It's a good, this is part of the strategy. So I'll get to that. Yeah, so basically dollar amount, donor's name, and all that good stuff. And it's the same thing for FHA. So if you flip it over, FHA is slightly a little different, but it's the same thing. It just basically says, hey, the donor certification says, as a donor, I gift these funds into play toward the purchase of the recipient's home. I certify the repayment is not expected or implied on this gift in the form of cash or future services. I certify that these funds are the gift or were not made available to me from any person or entity with an interest in the sale of property. That's what the biggest thing with these gift funds are. They're really worried about people, the builder or the person selling the home is basically giving them money, right? So that's the first thing to look at. Here's, if you go to the very bottom page, the one that you can't read. It says the agency requires conclusive evidence that the funds given to the recipient came from the donor's own funds. If the donor borrowed the gift funds, the donor must provide evidence that those funds were borrowed from an acceptable source and not a party to the transaction, including the mortgage lender. So, so that's kind of it too. So if they're borrowing money from somewhere else and doing it, and we know about it, then we have to figure out where they got the money from. That's on an FHA loan. Okay. But actually, that's what we need to do. We need to document the gift and who it came from, or document. Then the next one, so here's a copy of that one, that one. Oh, so online, sorry, people, yeah, sorry. This is a copy of the gift letter, so you can see what that looks like. And then on that picture. And then verifying the donor's ability of the funds transfer of the gift. So once they're gonna give the money, the lender must verify there's sufficient funds to cover the gift are in either the donor's account or have been transferred to the borrower's account. So either they have them and then it transferred to the borrower's account, right? So we either get a copy of the donor's check and the borrower's deposit slip, so the deposit in there, I get a copy of the check. Or we need a copy of the donor's withdrawal slip and the borrower's deposit slip, or a copy of the donor's check to the closing agent, or settlement statement showing receipt of the donor's check. So the easiest way to do that, I really think in gifting and make it super easy, is just having the money get directly sent to escrow. Because if the check comes in the form of, it comes as a check, and my mom gives me money for the loan, I gotta deposit that money into my bank account. Now I've gotta get my bank account to the lender so they can see the deposit going in. If there's any crazy stuff going on that bank statement, then then opens up another can, right? So any large deposit. So this kind of goes back to the whole idea of the assets. If we see large deposits into the checking account, we have to figure out where they came from. Okay, so if I see a checking account that had $5,000 deposit, the underwriter's gonna, where's that 5,000? What was that? Is that from the builder, buyer, seller, whatever it was? And it's like, no, it was a check that my buddy gave me because I won something on fantasy football, right? So I have to figure out where that came from and document that. But I don't have to document any assets if the asset is a gift going directly to the escrow company. So it goes directly to the escrow company. My underwriter does not need to see any bank statement or whatever from the buyer, because it's all directly going to the escrow company.
So,
Okay.
okay, so someone could take like 25K cash, go to the bank and be like, I want a cashier's check, and then just deposit it to escrow. You guys won't verify.
We have to verify it came from the donor. So yeah, so from the donor, right? So it has my name on it, right? I get the 25,000, put it in cash, I can take it over, or best yet, I'll put it in my bank account and then wire the money directly to the escrow company. Then the escrow company gets the wire confirmation that says it came from me, my bank account. Good, that's all we need. It satisfies that requirement, a copy of the donor's check to the closing or agent, or settlement statement showing receipt of the donor's check. So it can be wired directly to the escrow company. So if I'm using 100%, yeah, good.
So are you saying that it's okay for the donor to deposit into the buyer, and then the buyer is going to send that over to escrow?
You can do that, but as the lender, I will need the buyer's bank statement.
Okay, so then that's where I got lost, because
so
that's
yeah.
what I thought he was asking. If so I can put it in my bank account and then transfer it over to closing, but that's not really what you're saying. You're saying it's probably better if the donor sends it directly to closing.
Yeah, because that means I don't have, so I try to make things, when I try to limit anything that might cause any issue, right, with the underwriter, right? So if I can have the money coming from the donor, right, directly to the escrow company and not making a pit stop into the buyer's checking account, that's super easy. Then I don't have to get a document or anything else from the buyer, bank statement, which might open something else.
But you still have to verify it.
I have to verify it came from the donor, yes.
Okay.
So the money goes directly to the escrow company, and I can verify it came from whoever the donor is, right? I can verify it came from them, because escrow will have the information, the wiring information, right? With bank and who it came from.
But you don't have to investigate it further. You just have to see that it came from Dave and that's it.
Correct.
Okay.
So, but with that, I guess it depends on what side of the aisle you are. Because if I am a listing agent and I know that they need to get a gift fund,
I'm gonna hit that at the end.
okay.
I got that covered for you.
I'll leave it alone.
I think it's easy. If it's a FHA, then they have to provide all bank statement, everything.
Yeah, they're
Why?
making changes to that. So I don't
No,
think we need to
change.
do that anymore. I don't think we need to do it anymore. They're making that change.
Oh,
Okay,
that's
I,
good.
yeah.
If
so
it's
that-
conventional, they don't have to. right?
Correct. That was always the major difference between FHA and a conventional loan. On an FHA loan, right, or on a conventional loan, you can go directly to the escrow, donor sends it directly to the escrow company, verify who it came from and the amount, sweet. FHA used to say, look, if the donor's sending the money in, we want to know where that donor got that money from. So you got to chase that rabbit hole, you got to go all the way back and other stuff like that. So again, the mark with the asset piece is that you have to have at least 2 months of bank statements if we're gonna verify the borrower's assets, right?
Mhm.
So if you look at 2 bank statements, and if we see large deposits in them, we have to source where they came from. After 2 months, it's considered seasoned,
Okay.
so we don't have to worry about it. So if I had $200,000 in cash I just found on the street, I deposit my bank account, I wait 2 statement cycles, then it's considered seasoned, we don't care where it came from, okay? But that was the biggest thing stuff. So then you have to chase it all down where everyone got it from. So that's going, I think that's going away. Okay. But yeah, so when the funds are not transferred prior to the sale, same anonymous document that the donor gave the closing agent the gift funds in the form of a cashier's check, another official check, whatever it is. So I can bring a cashier's check directly to escrow, or I can do the wire. Okay. But on the remittance, it'll have the name of the donor if you do the cashier's check. So my name to close it, donor to close it. That's the best way to do it. So here's the other part of this too, though. Okay. So that's that second sheet I gave you. Do you have the second sheet up? Yeah. Did you get it? No. Oh, sorry. So this one here is kind of interesting. So this applies to sessional and jumbo loans, anything over 976. But the borrower has a minimum contribution requirement for the borrower's own funds. In other words, some loan programs require that I have to have my own funds at a certain percentage before I can use gift funds. Okay. So typically, if you're doing 20% or more down, a 1 to 2 unit principal residence or a second home, okay, a minimum borrower contribution from the borrower's own funds is not required. So if I have buying a house for, I'm putting more than 20% or more than 20% down, and I can get it on gift, no big deal. Okay. On a 1 unit principal residence, a minimum borrower contribution from borrower's own funds is not required. So I can do a 1 to 2 unit principal residence, a second home, or 1 unit principal residence. 20% down, I have to bring one funds. But if I'm buying less than 20% down, and I'm buying a 2 to 4 unit principal residence or a second home, the borrower must make a 5% minimum borrower contribution from their own funds. Okay, so that means if I'm doing that, if I'm buying a 2 unit property, whatever it is, and I want to give funds, I have to at least do 5% of my own. Okay. Make sense?
But that's
So-
for 2 to 4
Correct.
unit. What about just your single residence?
From residence, the minimum borrower contribution from the borrower's own funds is not required.
Even if it's less than 20%?
Correct. So I could do less than 20%. Oh, no, if I'm living in the house, I can do 5%, 3%, whatever. If I want to do a 2 unit, 4 unit, or a second home, then I'm putting less than 20% down, then I have to have 5% of my own money. This one up here, I'm putting more than 20% down, they don't care. Okay, so sometimes that'll burn you, especially on like jumbo loans. Every investor is slightly different. So some of them require you can have no minimum contribution, some require a 10% contribution. So if you go into the jumbo land, anything above 977, then you need to really look at this if you're getting gift funds. Some investors won't even allow gift funds on a purchase transaction if you're a first-time home buyer. Okay. Those are the kind of stuff we have to focus on. But this right here is just, you might get burned, don't get burned on that. The lender should know this, but I'm just letting you know. And so using gift guidelines on these events. So sometimes we'll have large deposits of cash, okay? Wedding gifts, maybe the person got cryptocurrency, foreign assets, I sell a home abroad, right? And I'm getting that money and how do I document that? In the sale of an asset, car, whatever it is. So typically, what really works, those are these kind of events, right? And so the idea is, what's the work around that, right? What do we do? What does a good loan officer, a good mortgage consultant help you with to kind of figure this out? So if you look at these different deposits, so if I have kids, so like I said, you had to have 2 months of bank statements that we look at, and we see large deposits, you have to figure out where they came from. So if I get this bank statement and I haven't talked to the client ahead of time, I haven't really educated what I need to do. And I have this large deposit of cash to say $30,000, right? Or whatever it is. I can't really source cash. I gotta figure out where it came from, right? So then I get either gotta wait 2 months to let it season. Or, hey, or the large cash came from cryptocurrency sale. Or it came from a wire from abroad because I sold my house in Turkey, whatever it is, right? And then so how do I document that? You know, how hard it is to document that stuff. My favorite one is the one in Korea. He had an investment property and had some stocks that he sold. Then he's gonna wire the money directly into his account. I'm like, whoa. That's gonna be really hard to source. So what you can use the gift guidelines to kind of work around this. So if I have a large deposit and it comes in at cash, I have cryptocurrency I've sold. And so maybe my husband and wife, I'm on the loan, but my wife is not on the loan. If that money goes directly into her checking account, and then she gives it directly to the escrow company, that's all I need. The rule says if it's coming from a gift, all I need to do is verify it came from the donor and how much you get, and they sign the letter. We're not gonna see where it came from. FHA might be a little different, right?
Yeah.
You've been through that rodeo before.
Yeah.
So that's the thing. So one way to really work around it is if you have, again, these are just, I'm telling people what the gift guidelines are, right? So if someone puts money into another account and they run off with it, it's not my fault, right? So, but ultimately, that's what you kind of do is you have family members and everything else. And I think one way is if you if you have a really hard way to document it and you don't want to wait the 2 months to let it season, one option is using the gift funds and getting a gift from that. And the thing is that if the gift comes from the donor, right? I'm not using your assets at all, so I don't need any bank statement or anything. All money's coming directly from the donor. That make sense?
What if you have stuff from like a GoFundMe?
I don't know. I mean, I would think it's the same thing. If you can prove it, you can show the GoFundMe website and say it's there and here's the money that I got in deposit. I think that would be okay. It's the same thing with like wedding gifts too, right? So, sorry. So wedding gifts, copy of the wedding invitation. They'll want a copy of the wedding invitation, right? And then all the gift funds deposited within 60 days of the marriage. So if they're coming in and different these checks and everything else, or it's large, or it's cash, people get a ton of cash for that. That makes sense, right? So we can document it that way. Those one I thought was kind of. So then, yeah. So again, that's the easiest way to work around that is just to do. If the money's coming into it, if you have the money cash and it's hard to be sourced, try gift. Again, a gift can come from any family member, right? So it can come from family, cousin, uncle, whatever it is, right? Again, we're not gonna be the police that goes through and verifies blood type, if you know what I mean. So those are ways to kind of make it work, okay? Then, I get this question all the time. Gift backs. So basically, you can gift money, and it depends on what you report. It's notice is on the donor and the buyer if they want to report what they received in income and not on the taxes, okay? As a lender, I'm not looking at that. It's how you report the event. So if for some reason you close the loan and you're like, hey, this is a gift, and then at the end you maybe change your mind, whatever, I don't know, it's not a gift for the IRS tax purposes, we're not going to check that out, right? So the idea is just, hey, for the purposes of the loan, it was a gift, I'm not going to repay. But if I did, and hey, mom and dad, I feel bad, I want to pay you back. That's after it closes, we don't, it's how you want to report it to the IRS. The thing is too, is that before they have limits of how much you can gift per year. The current annual gift limit is on $18,000. But this is how much someone can gift recipient in 24 without having to file a gift tax return. Exceeding the annual limit doesn't mean having to pay taxes due to high limits on the tax-free gifts that can be given over one's lifetime. the lifetime limit is projected to be reduced to about 7 million or less in 2026. So right now, the lifetime exemption is up to 13.61 million. So essentially, you just gotta file, file a gift tax return if you need to, but if you can exceed it, you don't have to pay tax on it.
If it's
That's
like,
the thing.
do you know if it's $18,000 per person, like, you have 3 family members that can.
Well, the annual tax-free gift limit is 18,000.
Oh, okay.
All right, so, but you can do more than that. It's just how much someone can gift recipient. It says, this is how much someone can gift a recipient in 2024 without having to file a gift tax return. So exceeding the annual limit doesn't mean you having to pay taxes due to high limits on tax-free gifts that are given in one's lifetime. So you can still gift more than that, but it's going to your 13.16 million that you can give for the life, for your life. So, like I said, we don't report anything to the IRS in terms of gift. It's how you report it, or how the buyer reports it, or the donor reports it on it. Okay. So then back to you, about protecting your buyer and seller and your commission. Okay, so we've shown ways how to make the gift work, right? But the other part is on this is that you have your financing contingency, right? On the financing, just like you said, right? It says here, earnest money. Buyer possess sufficient non-contingent funds. Down payment goes and reserves was able to, so that's what it's asking for. It says you have to provide that the buyer possess sufficient non-contingent funds to close. To get your earnest money back on that, and that's on the financing. So it's up to, if some reason, if the gift is supposed to come through and it doesn't come through. Right, and the deal falls apart. You have to provide that. Have you had that happen before? Does it happen to you as a listing?
Wait, what has happened?
Well, the buyer did cancel because maybe the gift funds didn't come in. Okay, well, or if maybe if something happens and they can't get the money, then what do you do, right? So if you're back, you don't, I mean, again, it's another contingency that you're putting on the contract.
Right.
So it just depends on, you have to kind of gamble and not gamble, but you gotta figure out what.
So with this statement here, then the buyer gets their earnest money back.
So it says that the buyer is not waiving financing and is unable to take financing by good faith effort, then the buyer's agreement shall terminate. Earnest money shall be refunded back to the buyer after the lender confirms in writing the date the buyer's loan application for the property was made, including a copy of the loan estimate and those provided to the buyer, and that the buyer possesses sufficient non-contingent funds. Close. So I don't have the gift funds, gift doesn't come through. I don't have enough funds to close, so theoretically, you could probably lose the earnest money because we didn't have enough funds to close.
So that would be in favor of the seller,
No,
Okay.
Well, I mean, yeah, correct, because
Because
you
the
can't,
seller gets to keep the earnest money, but it's not.
No.
in favor of The buyer.
you're not saying that our seller can keep the earnest money.
Well, it says that.
Would they have?
shall be refunded back to the buyer after a lender confirms in writing
Yeah,
that one of them, that the buyer possesses sufficient funds to close.
so if they didn't possess it, then how can they get their earnest money back?
Because they never received it, so they can't close.
But but on the contract, that says you have enough money to close.
Right.
That's boilerplate, I think it's it says you have sufficient funds to close at the beginning. This one says, we did have sufficient funds to close, but I didn't because the cash never came in, right? The gift was never available.
Mhm.
So they're gonna say, why can't you close it? Why is it terminating now? Everything's been verified. What happened? Oh, well, they didn't get the gift money. Oh, well, you didn't tell me it was a contingent on gift funds. Because if it's contingent on gift funds, you have the contingency on the gift funds.
That's the 22 EF though, right?
I don't know. I mean, that's
Yeah, if they use it. But as a listing agent, I'm gonna ask for the 22 EF. Cause I wanna know where this money's coming from before I take my client home off the
But
market.
the EF, is that a contingent funds? Are you saying I'm using funds, contingent
Proof of
funds?
funds.
Proof of funds. It's on there, like, don't you have a contingent funds one though, too? Like, if not, if you have to sell the
contingent.
house, but maybe there's others, gift funds, contingent liability like
I
that.
think it's only
If they
22,
don't
yeah.
use the EF, they're representing that they
Have.
they already have the money.
Right,
Yes.
yes. I agree.
So that's what the EF is, right?
Proof of funds,
So you have that. So if you didn't have that,
right.
right, or if the proof of funds says that, but on that EF, it's gonna say, is there on the form that says it's coming as a gift?
There's a gift section on there.
Yeah, there's also probably a loan section too, right? This isn't either getting a loan. And as part of it's a gift.
Mhm.
So if you don't have that, is there, I mean, I don't know if as a buyer, do you provide that?
I don't unless they ask for it.
Yeah.
I wouldn't
Okay.
unless they ask for it.
Well, okay, yeah, that's what I'm saying, but then what happens if you do that and then all of a sudden your buyer doesn't have the money
Mhm.
to close because the gift never came in,
Mhm.
right? So then if you try to get out of this and you don't have the contingent funds, wouldn't you lose your earnest money? Or could that possibly lose your earnest money?
It all depends, because if the lender sends over a letter that explains whatever the three things.
Yeah, so I need to show, there's money shall be either funded to the buyer if the data loan application, property, including a loan estimate to the buyer, and that the buyer possessed enough funds to close.
But if the buyer does possess, the sufficient funds, then I don't see that there should be no. Close. Then if I was the listing agent and I know that they have the funds, and they still wanna not close, like, that makes no sense to me.
No, they would have to get the letter to show that they can't
Correct. So if you're
close.
backing out with financing contingency,
Right,
I can't do the loan because I never got the money,
Yeah.
the gift, okay? I gotta tell that, I gotta say I can't do it because we don't have the gift, right? So if we don't have the gift, then that doesn't meet that requirement.
mhm,
If you or if you do the EF and you say I'm contingent on gift money,
mhm,
hey, the gift didn't come in, I'm out, right? So you got everything protected. So it's that balance between, do I want to provide more contingencies?
who got what, is it the seller or the buyer?
Okay,
Who's protected?
well, I'm just saying, I'm saying if you have your buyer, right?
Mhm.
You're representing the buyer. Buyer's gonna get gift funds, but we don't put in there an EF or something contingency saying it's coming as a gift,
Mhm,
and that gift doesn't arrive.
mhm,
So now I gotta cancel the transaction because we don't have any assets and we can't close.
right,
So then I'm gonna have to provide, then I have to state the buyer possessed sufficient contingent funds to close, which they didn't,
right,
right?
and you can't,
Yeah, because I don't have it.
right, so you can't do the letter because you can't,
Well, what you would have to get some kind of, I would have to say, look, we can't close because we didn't have enough assets. And the buyer seller's gonna go, why do you have enough assets?
right,
You said you didn't tell me, you said we had it all, there's no contingency.
right,
So then you might, I'm not saying you won't lose it, but it might.
right.
But as a seller, right, if you have these if you ask for that, and then have the contingency fine, then I guess you're protecting yourself from, you can get, I mean, essentially, I guess in a weird way, you're protecting the buyer's earnest money.
Mhm.
But you want to close, obviously, if you're accepting the contract.
Right.
But that's what I'm just kind of, I've never had that happen.
Mhm.
I mean, ultimately, I guess, if I could show that you had enough money to close in a 401k, right? We're not using that money, but I can say we had enough, we could probably get out of it that way.
Mhm.
But if they literally clearly had no other cash and it was only coming in, there's nothing else, you could theoretically put your earnest money at risk. So,
I knew of someone who, grandmother was gonna give them some gift money,
yeah,
and then at the last minute decided she wasn't gonna give it to them
yeah.
if they were moving in with the girl.
Well, that makes sense, yeah, I get
Right.
that.
'Cause grandma didn't like the girlfriend, so she
Yeah.
said, nope.
Well, that's part, I mean, that's part of, going through that vetting process. I mean, again, if someone says, hey, I'm getting money from my grandmother, great, and I have her sign a gift letter.
Mhm.
Again, you can sign, the gift letter has to state when the money is gonna deposit and everything else, and you can just put it in there at closing, which is fine. If grandma signs it, then how would I know that grandma's not gonna gift it, right? So she went ahead and signed it. But I guess, I mean, I would say that hasn't ever happened in terms of just the gift letter not coming through it, typically not gift letter, but the funds coming through. But hey, I guess like anything else, if I'm selling stock or whatever it is, and it doesn't come through, I need to show that I had enough money to close and it didn't come through. Can I get my earnest money back? Does that kind of make sense? It's not real hard, it's just that we have to, I see more deals fall apart because of this stuff than income and credit and everything else, because you really have to educate your buyer about how to use the fund. So example, I had one here. Was it maybe last year, 6 months, 8 months ago? Money was coming, dad gives her the money, gives the husband and wife. Dad gives the money. Goes right into their BEC bank account, and I see it's $50,000 deposit. I'm like, okay, what's this? And he goes, well, we went to BECU and they said, oh, you can just deposit the money in the checking account, it's okay. Well, now I got this large $50,000 deposit, okay, so where'd you get it from? I got it from the wife's dad, okay, great. Let's see his bank account, well, he's not on the bank account, essentially, it's from, he's a construction worker or construction guy, has his own company. He has his own bank account, but he puts his daughter's name on it. So it doesn't really connect to him. So now she deposits the money, so now it came from this account that his wife's on, who's on the loan, the $50,000 deposit, now it's not a gift. Okay? Now I gotta go back and see where she got the 50,000 from, and it comes from her dad's business account, but you can't use business accounts as a gift, you know what I mean? So you just get this whole snarly thing. So I'm like, well, this isn't good. So then what I did is I said, look, can we get our 50,000 from your dad and just gift it directly to the escrow company? So that's kind of what we had to do. So you had enough money left over. The other grand had another bank business account had like 100 grand in it. So he gifted her money directly to the escrow company. So we didn't have to deal with all that. So that's the kind of stuff that, you know what I mean? That's the kind of stuff you need to vet ahead of time. Because if I had talked to him after he started to make his application at BDC, I would have said, whoa, 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 whoa. Don't move anything or do anything unless, let me know. Because if you start doing that stuff and it gets deposited, and it's real hard to back out money. Right? The underwriter's like, hey, where did this $50,000 come from? Well, it came from a legal source, right? And they're gonna go, whoa, whoa, you know, it just creates just more layers of stuff. And some underwriters will say we won't do it, and some of them are gonna say, look, I think we're okay with it. So luckily we have one that says it's okay with it. But that's the idea. So if I can get ahead and figure out where the assets are coming from, that's the first thing I always ask. Where is it coming from? How are we gonna do this? Do we do gift? Do we do this whole thing? We only have to do deposit? Can we go directly to the escrow company? Or if I see a bank statement with a ton of large deposits in it, what do we do and how do we work on that? Okay, so just not, hey, what's their income, what's their, you know, everything else. I gotta make sure, look at that bank statement, because if not, it's a world of hurt when you're through that contract and you're like, crap, I didn't see that. Why not to do that? So. Just looking out for you guys. My experience. And then I think that's pretty much it. That's all I had. So short and sweet, but it's just kind of important, you know, to do that, so.
Thank you.
Any other questions or anything like that? But I would keep that cheat sheet though.
Yes.
This one, it's kind of interesting to have. And then I'll find out for you for sure on the 401 or the FHA.
Okay.
But I think they're changing.
Thank you.
Yeah.
Right,
I'm turning-
back to,
Yes.
let's do this. Educate me. Okay, so do I need to go pull up to look at? Let me go to. Like. Sure.
You'll know it's because all this stuff is